Inflation came in less than expected, but the Fed says that there is a recession inbound. Let's talk about how this is going to play out. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our weekly market recap webinar. My name is Chris. I'm part of Riz International, and we're a group of traders who look to try and help each other learn how to grow and excel in trading in the market to help make our money work for us and not work for it. And we had some big things happen this week that we need to talk about. So what happened this week? Now, if you watched last week's webinar, which you should have, but if you didn't, let me give you the heads up. Basically, the CPI numbers and the inflation rate was announced, and inflation came in lower than expected. So I have to eat my crow on this one because I thought it was going to be the other way around, but such is life. So basically, inflation was lower than expected, and the market was very happy about this on Thursday. We saw a nice big run up, and then we saw a lot of indecision on Friday. But one thing to keep an eye on is something the Fed mentioned, and they are now using the dreaded R word, and that word is recession. They said the Fed projects for a mild recession starting later this year with recovery over the subsequent 2 years, according to the minutes released Wednesday by the Fed. That would spark a jump in unemployment, and they estimated the economy would fully recover by 2025. That's big. When the Fed actually admits the fact that they think that a recession is inbound, that is not something to be taken lightly. However, the market seems to be continuing to want to push upward. We are still in this nice little upward channel here that we've had for, since about October, after we kind of started recovering a little bit. But honestly, we're not too excited about this rally just yet. However, overhead resistance, next level is going to be 4,200 that we're going to be keeping an eye on, but also be aware that earnings season starts this week. So all of first quarter earnings are going to be reported, and that can push the market in one direction or another, regardless of what the Fed talks about. Now, of course, the Fed talking always seems to push the market one direction or another, but was really interesting on Friday as we had this nice rally early, and then we completely reversed by lunchtime. So the market is incredibly whipsawy right now. That's really the best way I can describe it. We just can't seem to really pick a solid direction. Now, you could look at it and be like, oh, hey, we're going up. Yeah, but, we've seen this before where we go up and we come back down. So we're still holding a fairly bearish outlook on the market for the time being, unless we are shown something otherwise. But the fact that the Fed said that they expect a recession in the middle of this year definitely supports our thesis at this point. Now, I'm not telling you which direction you should trade, and I'm not a financial analyst, but what I am going to tell you is that if you're watching us on YouTube, make sure you smash that like and subscribe button. Become a member here at the Riz International YouTube channel. It really helps the channel grow, and we really appreciate it. But, what I will say is we are taking a very conservative outlook on the market right now. This may just be a temporary push towards the upside until we start to see more downside. The truth is, if they keep pushing interest rates up, it will negatively affect the banking sector, as we've already seen. All that's going to happen is we're going to see more of that. The harder they push interest rates, as fast as they push them up, it could be a little dicey. Now, my personal prediction, next interest rate hike is probably going to be about 25 basis points. I think that's the consensus right now, what everybody's expecting. And then people, and the market, I should say, is expecting a pause in interest rate increases. I'm not sure if they can pull that off, but we'll see going into that. But obviously right now, this week, we are focused on earnings, and that's what we're going to be keeping an eye on primarily. All right, let's take a look at the breakdown for the S&P 500. For the first time here in recent memory, communications is outstripping tech right now. Both still performing spectacularly, over 20% up for both of them on the year. And we have here consumer discretionary also making a very nice push towards the upside, plus 14%. So those discretionary goods that maybe you don't necessarily need every day seem to be going upwards a little bit. People putting money into that. The market itself is up a nice 7% so far this year from the beginning of the year. And looks like energy and consumer staples are above the zero line, and everything else is still below. So there are a lot of things that are still kind of beat down. Now, we are seeing this nice curve up in financials, which it lends itself to people thinking that the bank crisis is over. I'm going to throw the BS flag on that one, and I don't think the bank crisis is over just yet. That's just my opinion, and you can take it for what it's worth. I'm just a guy on YouTube or talking to you through the computer right now, but I feel that as long as the Fed keeps hiking interest rates, we've got more potential for bank failures, and that's obviously not a good thing for the financial sector. So we may see some temporary relief in this sector for now, but I think we've got more downside. Utilities, real estate, and healthcare all below the zero line just by a bit, down 2% or less so far this year. Let's go ahead and take a look at the asset classes. After the announcement from OPEC Plus that they were going to be cutting production, we saw a very nice spike here in oil, and we continue to climb and grind just a little bit higher. We did kind of push out of that channel that we were in for so long here, starting at the beginning of the year, actually last year in November. We really just kind of stayed in this channel for a while. We broke down below. Now we're pushing back up. So oil making a nice little move up, and gold continues to rally, pushing over $2,000 an ounce. Now, we did kind of come close to our previous all-time high on gold, which is right around 2050. Let's see what that is exactly. 2050.17. So let's be perfectionists, shall we? Let's make sure. Oh, here we go. 2050.17. There we go. Beautiful. Okay, now it's perfect. It's perfect for the top. We didn't quite make it there on Thursday. Looks like we got pretty close at 2040.27, but a little bit of a pullback on Friday on gold, but still holding over the $2,000 per ounce level at this point. So a really big run up in gold here, preceded by the financial issues, the bank collapses, and really there's just been a lot of push behind this so far. So gold looking very bullish here. No position on either asset class at this time, but definitely something we are keeping an eye on. Another thing we're keeping an eye on is the Treasury yields. As the, again, bank collapse here, Treasury yields took a beating, and we've really just been trading sideways for the most part. I shouldn't say trading. The yield curves have been really kind of consolidating at this point after this, really big drop down after the banking collapse. We've really just kind of been trading or going sideways on these yield curves. But one thing that hasn't been going sideways is the dollar. The dollar's definitely been losing some strength. Still definitely okay. Nothing to be worried about. We're not raising the alarm. And if you've watched Riz on YouTube, on Instagram, he's been very vocal about everybody's freaking out about what's going on with the dollar and why you really shouldn't be freaking out. So if you want to check that out, make sure you go ahead and follow him over on Instagram. That link is down in the description if you haven't done so already. But yeah, the dollar really just kind of hanging out here. Been definitely taking a hit as of late. Still above the 101 area. So, we're kind of holding that zone right now. We'll see if that continues going on. But as the Fed increases interest rates, obviously we should see, some decrease in the power of the dollar here because there's going to be less dollars in circulation. So that is one thing, and at least that's what they're hoping for. We'll see whether that works out or not. All right, let's take a look at the big dates this week, and there are none. I'm just going to tell you that the big dates are earnings days, and those companies that are reporting are the ones you need to be looking at. We have building permits being released on Tuesday, so that's pretty much nothing you need to be worried about for the most part. In my opinion, really not much going on as far as big dates this week. But yeah, earnings calendar is definitely something that we're going to be keeping an eye on, something that you should be keeping an eye on too. And if you're here on the live call, feel free to start posting your questions if you have any. I'd be more than happy to take a look at anything you guys are interested in. But yeah, really getting a lot of mixed signals from the market right now. And I think that's really the concerning aspect of what's happening at this time, because we have the Fed saying the R word, and the market kind of reacted to that on Wednesday with a little bit of a downslide. And then when the CPI numbers came out on Thursday, we had a really nice push towards the upside, and then Friday was really just a lot of confusion. No one knew which direction to go, so they went nowhere, and a lot of indecision in that candle there. So it's really difficult to trade in this environment. And this is why I was talking about in our chat when I saw the market just take a dump like this. I made the comment, this is why Riz is taking a more conservative approach, and why we recommend you taking a conservative approach as well. We haven't been, insanely buying into these rallies. Have we been taking strategic positions? Yes, we have. But it's not like the minute the market bounces, we're like, okay, it's on. We're just going all in, risk off environment. Appear to be some people who are doing that. We do kind of see that with these pushes here, but there's still a lot of indecision in a lot of these candles, a lot of up and down and whipsaw, and it's very tricky to trade in this environment, which is why we're being very, very careful, because it's real easy to lose your shirt in an environment like this. And taking a more cautious, conservative approach, although it's not flashy, it may not be exciting, it is a good way to grow your account. And that's what we're all here to do, I think. That's what we want to do. We want to grow our account. We want to make sure we're continuing to push those gains, even though they may not be as big or as easy to come by as, say, in this era right here. We're still working as best we can. It's been incredibly difficult. And all I'm going to say is if you're making profit in this environment, then you're doing something right, because it is very tricky and there are a lot of people who are having a rough time. So with that, I'm not seeing any questions here from the live chat, so I really appreciate all of you coming out. It's been great. As always, our YouTube subscribers, we love you guys too, and especially to all of our Riz Elite members, you guys are the best. We really appreciate each and every one of you, and we hope that you're getting something out of these webinars so that you can kind of get a broader understanding of what's going on in the market over these last couple days. So with that, I'm going to go ahead and close it out, and we will see you in the market on Monday.